Now, we look at whether the dollar is losing its global dominance. International Monetary Fund's data reveals that US dollar's dominance as the world's primary reserve currency is slowly eroding.
US dollar in global trade under an existential threat. This may well be the case because a critical decades-long deal between Saudi Arabia and the US, known as the petrodollar deal, expired on June 8.
But in recent times, the dollar's dominance has been called into question, with the Chinese yuan posited as an alternative.
The mighty US dollar seems to be losing its grip on global dominance. But what's really going on? And more importantly, who's cashing in on this financial roller coaster? Hey there, money mavens and curious cats. Welcome back to our channel. Today, we're tackling a hot topic that's been burning up the headlines, the falling US dollar. So grab your favorite beverage, settle in, and let's unravel this financial mystery together. Now, before we dive in, let's get one thing straight. We're not just talking about the piece of paper in your wallet. The US dollar is like the popular kid in high school. It's everywhere, and everyone wants a piece of it. In fact, as of 2023, about 59% of all foreign exchange reserves worldwide are held in US dollars. That's a lot of greenbacks, folks. But here's the kicker. This financial prom king is starting to lose its crown. So, why is this happening? First up on our list of dollar-draining culprits, interest rates.
Risen significantly, but dramatic increases in money supply have kept dollar values relatively low.
Now, I know what you're thinking. Interest rates? Snooze fest. But hear me out. Interest rates are like the heartbeat of the economy. When they're high, money flows in, like tourists, to Times Square. When they're low, well, let's just say it's not exactly a party.
And now the Fed has pretty much conquered the inflation rate, just so everybody...
Recently, the Federal Reserve has been hinting at potentially lowering interest rates. Why? Well, it's like when your car's running too hot. Sometimes you need to cool things down to avoid a total meltdown. Lower interest rates can stimulate economic growth, but they can also make the dollar less attractive to foreign investors. It's a classic case of you win some, you lose some. But wait, there's more. The US economy's performance is another key player in this dollar drama. Think of the economy as a big, complicated machine. When it's humming along nicely, churning out jobs and growth, the dollar tends to flex its muscles. But when it starts sputtering and coughing, well, that's when things get interesting. Recent data has shown some cracks in the economic armor. For instance, a Labor Department revision revealed that the US added 800 fewer jobs than previously reported over a 12-month period. Ouch! This kind of news makes investors nervous, and nervous investors tend to look for greener pastures, or in this case, stronger currencies. Now let's talk about the elephant in the room. Inflation.
Inflation is causing stress. Bad news about prices in the grocery store.
Historically high inflation.
Inflation. The sneaky thief that's been picking all our pockets lately. When inflation rises faster than expected, it's like a game of hot potato with your money. Suddenly, everyone's scrambling to get rid of their dollars before they lose more value. But here's where it gets really interesting. Some experts argue that a bit of inflation can actually be good for the economy. It's like adding a dash of hot sauce to your meal. A little bit spices things up, but too much, and you'll be running for the water cooler. The trick is finding that perfect balance. And right now, it seems like we might have overdone it on the hot sauce. Now, onto our final culprit, geopolitics.
Somebody else, because what's going on with BRICS? You're seeing China and Russia become best friends. You're seeing a potential peace deal. Iran and Saudi Arabia. Brazil is there with Lula, with these guys. What would happen if they start buying?
This is where things get really spicy. You see, the US dollar isn't just America's currency, it's the world's currency. Or at least, it has been for a long time. But lately, some countries have been giving Uncle Sam the side eye. Enter the BRICS alliance. That's Brazil, Russia, India, China, and South Africa. For those of you keeping score at home.
Deputy Chairman of Russia's State Duma, Alexander Babikov, told reporters that the BRICS alliance, which stands for Brazil, Russia, India, China, and South Africa, is creating a new currency that will be backed by gold, rare earth metals, and other critical commodities.
These countries have been making moves to reduce their reliance on the US dollar. It's like they're starting their own financial club, and the dollar isn't invited. Why does this matter? Well, imagine if suddenly half your friends decided they didn't want to hang out with you anymore. Your social life would take a hit, right? Same principle applies here. As more countries move away from the dollar, its global influence and value could start to wane. But here's the million-dollar question. Pun absolutely intended. Who's profiting from all this dollar drama? First up, we've got multinational companies with significant overseas operations. For them, a weaker dollar is like finding money in your coat pocket. When these companies bring their foreign earnings back home, they get more bang for their buck. It's like getting a bonus without actually getting a raise. Next on the winners list, commodity producers. When the dollar weakens, commodities like gold, oil, and agricultural products tend to become more expensive. So if you're sitting on a pile of gold or a field full of soybeans, you might be in for a pleasant surprise. Bitcoin enthusiasts, this one's for you. Cryptocurrencies, particularly Bitcoin, often move in the opposite direction of the dollar. So while dollar bulls are feeling the blues, crypto fans might be seeing green. Just remember, the crypto market is about as predictable as a cat on catnip, so proceed with caution. Foreign investors can also cash in on a falling dollar. If you're holding assets priced in other currencies, congratulations, your investments just got a boost. It's like getting a discount on everything you buy abroad. But before you start celebrating or panicking, remember this. In the world of finance, everything is connected. A falling dollar might benefit some, but it can also lead to higher prices for imported goods. So that new smartphone or fancy foreign car you've been eyeing, it might just get a bit pricier. So, what's a savvy investor to do in these turbulent times? Well, as the old saying goes, don't put all your eggs in one basket. Diversification is key. Consider spreading your investments across different asset classes and currencies. It's like having a financial insurance policy. When one area takes a hit, the others can help cushion the blow. And here's a pro tip. Keep an eye on emerging markets. As the dollar weakens, currencies and assets in these markets often become more attractive. It's like finding a hidden gem in a sea of ordinary rocks. Now, I know what some of you might be thinking, but what about price controls? Can't the government just step in and fix everything? Well, history has a few cautionary tales for us on that front. Remember when President Nixon tried to freeze prices back in 1971?
Inflation came roaring back. Because prices were frozen, consumers could buy more for less, but businesses didn't have enough financial upside to produce enough to meet the demand. This led to widespread shortages.
Spoiler alert, it didn't end well. We ended up with shortages and a booming black market. Turns out, you can't just tell the laws of supply and demand to take a vacation. Before we wrap up, let's address the elephant in the room, or should I say, the crystal ball on the table. Can we predict exactly what's going to happen with the dollar? Well, if we could do that, we'd be sipping Mai Tais on our private islands right now. The truth is, the global economy is more unpredictable than a game of Monopoly with your most competitive friends. But here's what we do know. Change is coming, and it's coming fast. The best thing you can do, stay informed, stay diversified, and maybe keep a little cash under your mattress. So there you have it, folks. The lowdown on the falling dollar and who's cashing in. Remember, in the world of finance, one person's crisis is another person's opportunity. The key is to stay informed, stay nimble, and always be ready to adapt. And hey, if you found this video helpful, don't forget to smash that like button, hit subscribe, and ring that notification bell for more financial videos.